At the Money Show Toronto, we're talking to Michael Kovacs, President and CEO of Harvest ETFs, and he's here to talk about equity income strategies for income and growth. Michael, thank you for joining us on SmallCapPower.
Thank you for having me here. Appreciate it.
So the audience today coming to the Money Show Toronto, they want to learn how to prepare for their retirement, how are they going to save money for the future. What's your message out there for them?
Well, we're in a very interesting point in time in history. We've got now record low interest rates, and as we know, I think $16 trillion now in negative interest rates in Europe. It's making it very difficult for investors today to plan for retirement. It's great if you're a borrower, but if you're an investor or trying to generate retirement income, it's a very difficult situation you're in now.
Given the uncertain macroeconomic environment and the volatility in the markets, how do you prepare for your future? How do you make your portfolio resistant to these external shocks?
Well, at Harvest, we're about long-term equity investing, equity with income. So we're taking positions that we want to hold on to, in some cases 3, 5, 10 years, by positioning in very good long-term growth industries, in what we call mega trends like healthcare, which is a very big trend regardless of what's happening in the United States around the US election. And then we want to own these positions for the long term, and we want to write options on them that allows us to generate high levels of income for our unit holders. So collect dividends, write options, generate that income at a point in time where your alternatives for interest investments is very low. Your rate of return, I should say.
There's a special ETF track at the Money Show this year. When the investors are coming to you, what are they asking you? What are their main concerns when it comes to ETFs?
Well, a lot of people are worried about volatility. They're worried about the markets. What's going to happen in the United States over the next year, the trade war. So all of these things play into the short-term noise around markets. But we've always had that. My career is 35 years. There was the stock market crash in '87, long-term capital crisis, the financial crisis, the tech wreck, all kinds of elections, U.S. Democratic and Republican presidents. At the end of the day, it's about owning great companies, sticking with them for the long term, and generating that cash flow.
How do you spot these winning companies, these winning bets?
Oh, well, the first thing we look at is great growth industries. So I mentioned healthcare is one area. Technology is another area where it's become a bigger and bigger part of our lives. It's going to continue to be part of our lives, whether it's in our car or our home, communicating back and forth with your refrigerator or whatever it may be. These are great growth industries. We want to position ourselves in what we feel are the leading companies in those areas. Companies that have great management teams, that are generating income through dividends, and that we can also write options to generate that cash flow. So it's about isolating what we feel are great industries and then picking the best companies in those industries.
And for the rest of this year in 2020, what's in the pipeline at Harvest?
We have 11 ETFs, and we plan on launching another one in the new year, possibly a couple of more after that, but we're very focused on what we do. We don't want to offer 65 or 70 ETFs. We want to really stay focused on our fundamentals, our core expertise, and grow our products in that area.
When I was reading your bio, one thing that came across is that you're an avid follower of Warren Buffett's teachings. Any one lesson that you could share for our viewers?
Yeah, one great lesson of Warren Buffett is you can't look at stocks as pieces of paper. You have to look at them as parts of a business. And if you take that approach, and if you take a business owner's approach, you're going to be much more patient in waiting out ups and downs in the market. So I think that's a core to all investment or investors, what they should do. Unfortunately, we do get caught up in headlines. We're all human, but the best thing to do is stick to the long term and treat stocks as businesses.
Thank you for those insights. That was Michael Kovacs for you from Harvest ETFs.
Thank you very much.